Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody, welcome back. Hope you're doing well. Happy Tuesday to you in this crazy market. Just as you saw just a moment ago, if you're curious about DNA Funded or would like to learn more about them, check them out using this link that just got dropped in the chat. DNA Funded now at this point been supporting the stream for a little bit, so we appreciate that. Okay, so let's talk a little bit of what's been going on here in this market. It's been very much a 24-hour news cycle. It even feels like less than that, to be honest. It's like every couple hours we get big news or something changing in what's happening in the markets. Anyways, S&P 500 is bouncing back a little bit today. Yesterday we had kind of continued sell pressure. If we take a look at the 4-hour chart, it's a little bit more apparent what happened. And it's still interesting how, we had that 90-day pause announcement, and this market just absolutely catapulted higher for like a day, right? And then kind of has just fizzled out and kind of drifted sideways to down. I saw a post from a friend of mine on Twitter. You guys might know BK Traders, but Boris, if you know BK Traders, friend of mine, Boris, he put out a tweet just discussing how you can oftentimes get the sentiment of the market, like you can get the sentiment of like which way the market just naturally wants to go based on the drift that occurs when there's not a whole lot of market news. So over here, there was a pretty consistent period of time where if no news was happening, the market would just kind of drift up by default, right? So the default direction for a long time, and most of the time for indices, the default direction, if nothing is going on, seems to kind of lean towards going up. That is until recently, where it feels more of like a negative, pessimistic market, because it almost seems like in the absence of news and activity and stuff going on, the market is defaulting to selling, which is a very unique kind of way of looking at this. Again, you can see we've had this persistent kind of selling that's been going on. And after that big, exciting news announcement and the optimism that, hey, maybe trade deals are going to go through and maybe things are going well, the market has defaulted back down to selling, right? Just getting out of US denominated assets. In this move in gold, right? This massive move that we've seen in the price of gold is kind of right now playing the ultimate role of the anti-US trade, right? As people sell dollars, sell US treasuries, sell US stocks, gold is playing the ultimate role of the anti-US trade. Now, I'm not, actively wanting the US to fail. I'm proud to be an American, but it's not about that. It's simply that's the flow of traffic right now. The flow of traffic is people are worried about what's happening in the U.S. and the government in the United States. If you're looking from the outside looking in to the U.S., you're like, gosh, I don't know, like everything is changing over there. They're practically declaring war on a whole bunch of countries through the trade war. And people might just be a little not willing to deal with that. So they're moving to things like gold. That seems to be at least the read I have on it from a real simplified version. Nick, you called out my stacking. Do you like bullion or coins? I like coins, but mostly I just have some like silver, what do you call it? Like just they're not actual coins. They're what's the name of it? I'm blanking on the phrase. Basically bullion, but not. It's not the bars. It's just the circular silver stuff. Anyways, we've got NASDAQ up 1.18% today. I mean, these are just kind of bounce back moves, right? That's the thing. That's the crazy thing about this is 6 months ago, if you had a 1% move on the NASDAQ, a 1.2% move was like kind of a big deal for the day. Nowadays, right now with this volatility so high, 1% is kind of a non-move. It's crazy to think that that's the dynamic that we're living in, but this market is so volatile, right? You take a look at the VIX, you got VIX still at 31.8. That's still high compared to what we've been in, right? Think about this. If you are somebody who's been trading for the last, well, let's go back the last like full year, right? In the last year, outside of that craziness that we saw in August, for the most part, you've been living in a pretty low VIX environment. And what I mean by that, if you don't know what that refers to, is the volatility index gives you an idea of the expected move according to the options market on specifically the S&P 500, but it pretty much ricochets into all assets and commodities and things like that. Like basically, when the VIX is really high, everything moves a lot. When the VIX is really low, everything moves a little. So I've seen a lot of people who are, and not to, this has been a tough year for a lot of traders, but I think part of the reason that it's been such a tough year is because people get used to one environment or the other. And I talk about this pretty often on my channel, but most of the time, when you get an environment like this, what people are going to do is they're going to get used to trading in that environment. They're going to get used to a high teens, low 20s VIX. And that environment is a very different environment than the one we are in right now. When you get up into the 30s on the VIX, that's a no joke VIX. That means that things can move really quickly. That means, yes, that's the word, rounds, silver rounds. I have a good bit of silver rounds. Not a crazy amount, but got some silver rounds. You changed a bit your speech when it comes to the U.S. staying on top. Well, Andrea, that's a fair question. You kind of have to, if you're a trader, you have to roll with the punches. You have to roll with what's showing up in the markets, right? And price and fundamentals tell you a story, right? We take a look at the dollar. The dollar index is not acting as a safe haven. You take a look at treasuries. Treasury yields should be dropping pretty hard right now as people buy bonds aggressively. We're not seeing that. And we're seeing US stocks underperform foreign stocks pretty dramatically. So am I a USA, downfall doomsdayer? Absolutely not. The US still has the best companies in the world. We are the home of innovation. We build cool stuff here. And we have a really important consumer to the global trade network. That does not, however, mean that we can't have a recalibration period, a part of this time where there's a whole lot of uncertainty about what the future entails, and people look for alternatives, right? I'm long gold, not because I think the US is going to crumble to zero. I'm long gold because the dollar's uncertain right now. We've had some mixed economic data points. Fear is very high. Uncertainty is very high. I bought this thing on a pullback and it continues to get a very bullish reading within my system. So even if I'm, pro-American, I think it's going to work out, whatever, put that to the side for a second and just trade the environment that you're in. I think a lot of people are going to get themselves into a lot of trouble this year on both sides if they let kind of their biases completely dictate what they think about this market, right? I like gold for a number of reasons. I'm super long-term bullish on metals, but I like them especially right now because institutional money has been flowing heavily into gold. I can show you that. Like, that's not something I'm just saying that sounds cool. We can see it in the the commitment of traders report. Take a look right here. What we've got is the COT data history, right? And you can see the blue bars are the long positions on the futures contracts, and the pink or red is the short contracts. What do you notice about this? And this is, again, this is non-commercial COT data. This is hedge funds, small banks. This is smart money. What is smart money doing? Smart money is heavily leaned long on gold. What about silver? I bet you it's pretty similar on silver. Yep. Silver and gold, we have heavy net accumulation, bullishness from institutional players when it comes to silver and gold. So what do I do with that? Well, I'll tell you one thing it does is it's factored into the top setups algorithm that if that is the case, we get positive scoring, we get bullish readings for gold, etc. Right? Now, that's not the only thing that we look at. We also look at economic data reports and technical data. By the way, quick little plug, we added this new feature. It's called the Top Setups Sentiment Only tab. So if you're somebody who really doesn't care too much to track economic data, for example, you can actually select only economic data or only sentiment data from our top setups algorithms that we just added. So in this case, you can see sentiment score is crazy, crazy bullish for gold. It's our most bullish reading on sentiment and on the top setups overall fully inclusive version of our algorithm. So we're getting very bullish because, again, COT data is incredibly bullish. Put to call ratio is actually showing a lot of people are buying puts on gold, interestingly enough. Right? We could go take a look at that just to study what we're saying there. Let's pull up the gold chart for the put to call ratio. We can still see some pretty heavy bearish bets on gold, which I think is really interesting. So anyways, when we're looking at gold, right, when we're looking at silver, the top setups page, this is really the core reason for why I have been bullish on gold. Another reason that I really liked gold going into this part of the year is because it was this part of the year, and we can look at the historical tendencies of the first quarter into the second quarter of gold, right? That's something that we can track. Why wouldn't we do that? We should. We've selected gold on our month-to-month seasonality chart, and what we can see here is that in the last 10 years, in blue, we can see the 10-year historical average during these months of the year for the price of spot gold. So January through April, this period of time in the last 10 years has been an abnormally strong period for gold. That was part of the reason why I went long gold, right? And that has been a really, I mean, we got way more than we bargained for. Look at the performance this year on gold. We had February, which was pretty much flat, but March and April and January largely exceeded expectations. We're having some insane moves for gold this year. These are way better. Like I expected, or I didn't expect, but I was thinking, making an educated guess that we could see a positive period during this year. But we got way more than we bargained for. So seasonality looks good. The commitment of traders data looks good, right? All of that said, all of that combined, right? Retail positioning through the put to call ratio, the momentum to the upside, PMI data coming in soft. These are the real reasons why I took that trade. It's not because the technicals just looked perfect. That's not why I took that trade. The trade was because sentiment, seasonality, economic data, momentum, all of these factors played a part in setting up the trade. Then the technicals were kind of the last domino, right? Pulled back to a key level, the 61.8% retracement. And to be transparent, I took an initial attempt at the 38.2% retracement, and I stopped out, took a loss, took a second entry at the 61.8% retracement, and that's the level that really took off and has kept going. I've since just trailed my stop loss further and further into profit on this trade. It's been a pretty crazy trade. I wish I had more that looked like this, really. So that's the full breakdown on that. By the way, just a heads up, Edgefinder is currently its biggest discount of the year right now. We're doing 45% off for a limited time. If you'd like to take advantage of that discount pricing, it's a one-time payment to get access to the Edgefinder. If you've been thinking about it, do not miss your chance. That's coming to a close very, very soon. Send us a direct message using the link that's just been dropped in the chat. If you're watching on a television or a device where you can't easily click on links or whatever, you can just navigate to a1trading.com and then open a live chat with us in the bottom right on your phone or your desktop, whatever's easier for you. But chat with us. Let us know you're watching the live stream, and we'll give you up to 45% off for the VIP group. I'm sorry, for the Edgefinder. Also the VIP group. We're doing pretty much a store-wide sale. Okay, so that's like the full context. I've been breaking down this gold trade because people have been asking, like, Nick, how did you find this trade? Like, how do we do that again? And full transparency, I had no idea that gold was going to do this, right? Was I bullish on it? Yes. Did I think it was going to make that move? No way. But that's part of the reason, right? That's part of the reason that my stop loss trailing concept is what I do, is because I don't know how far a crazy trend wants to go. Like, if this thing is going to, like, here's something that people, I've also been hearing on my comment section of videos. People are like, this is ridiculous. Gold has to pull back. But I'm not even kidding. Years have gone by where people have been saying that and dropping that comment on my videos, my live stream, people frustrated with the price of gold. Years have gone by saying it's overbought, and it just kept going and going and going. Will that change? Of course it will change. But you have to have some humility to say at some point, look, I don't know where that thing's going to turn. If you think you know where the top of gold is, good luck. Good luck. Because I repeat myself so frequently with this story, but it is like stepping up to face the dragon when there are thousands of bodies around you. That is fighting gold, right? You may think, just like all the other brave warriors thought, they were going to beat the dragon, but this dragon does not seem to want to quit. Like, this dragon is on a rampage, and you're up next. Like, if you're trying to short gold, in my opinion, that is the hardest trade in the book. Shorting gold or shorting NASDAQ when it's ripping, you're like donating to the markets, in my opinion. You do what you want. If you have a strategy or a system, don't let me tell you anything. I'm not here to tell you what you can or can't do. I'm just telling you from my experience and from watching this for the last few years. I can't tell you how many people have sent emails, messages, comments. Oh my gosh, Nick, gold blew my account because I was short. Just kept going. And it will happen on the other way, right? I'm not saying like gold goes up forever. It's just people fight trends on gold for some reason like crazy. Like, if gold goes down for the next 6 months, people are going to blow their accounts trying to call the bottom on it. It's not about that it's only going up. Like, it will go down eventually. But the point is, people think they're smarter than gold. They think they can call the top and bottom so easily. Nick's my birthday, man. Hey, happy birthday. And thank you for watching the stream for 3+ years. We should do some questions today. I've been loving doing the questions. I really do enjoy them. They add some variety to my, because I repeat myself a lot on these streams. It's part of the job, right? Like, I'm here on YouTube. Part of trading is very repetitive, like showing up, doing the same thing. But I love hearing you guys' questions. If you'd like to ask one, let's go ahead and collect some questions in the meantime. There's not any in the bin right now. So if you have a question for me about trading, about a chart that you want to look at, whatever, drop your comment. We usually get through most of them. And so if you have a second, if you're at a desktop or a computer or a mobile, whatever, you want to drop a question, just click that link, fill out the form. You can also find it in the description. And I'd love to see if I can get some questions answered here before the end of the stream or the end of my segment on the stream. Nick, do you have a video on how to trade bonds? I couldn't see one when I checked. I do somewhere, but I think I named it something that's not like searchable very easily. So I need to do one that's searchable. I think I named it something like every trader should know these two charts well or something. But I need to name one that's like, I need to do one and name one that's like how to trade bonds specifically. In fact, that's a really good video topic. So thank you for that. I'm going to write that down. And eventually, I'm stacked on projects right now, but how to trade bonds. I have subjects on, how to trade gold, how to trade oil, how to trade NASDAQ, just looking at fundamentals and all that stuff. So I'd like to do one in the future. So here's the thing. I've been doing a lot of questions too recently because so many things are just not at like setup levels for me. And I'm sure a lot of traders feel the same way, right? I've been asking people to say or to share this. A lot of people seem to be in the same concept, right? Everything's moving so sharply and there's very little pullbacks. So if you're, trading for reversals, overbought, oversold kind of stuff, you might have some trade setups right now. But if you're like a trend follower, momentum trader looking for pullbacks, it's a waiting game right now. Pound dollar, euro dollar. Like I like these trades to the long side. Euro dollar, if you give me a couple days down, you guys know, you come back to stream, we'll have a little bit more entertaining conversations about euro and pound. Same thing for the Australian dollar, right? We've got this breakout, but this wasn't, I'd like to see like this, like give me a couple days above and then pulling back into this. Because right now, I would say you're just sitting at resistance. So I'd like to see how we react to resistance on the Australian dollar. If you've been watching the stream, if we go to our major currency pairs for just a second, these are all trades that I am interested in taking. Pound dollar longs, Kiwi dollar longs, Aussie dollar longs, but just waiting for pullbacks. Same thing on the flip side for bearish setups on the dollar. We have dollar yen, so I'd be interested in a pullback to like this 147.50 to 148 level. Dollar Swiss, same thing, pull back to like 84.50, somewhere in this region, may be a trade setup for me. So there are setups, they're just not pulling back quite yet. And that's okay. Like we might just have to wait. It's part of the game. For my gold trades perspective, I hope they don't pull back because they are correlated for the most part. Gold and other dollar crosses for most of the time, they are pretty correlated. That being said, I do have my stop loss on gold locked just below this 3,300 level. So if we break 3,300, I'm going to take profits on this move. Does look like we're getting some rejection coming in today. But again, be careful with that. I wouldn't read too far into that. Some people are going to look at that and say, oh, yep, that's a topping signal. It's coming down. And maybe it does. But again, there's been several kind of examples of like topping signals in gold that people have been very deceived by and gotten really crushed. Nick also has a video on options. I do have several videos on options. And if you want to trade options, Timu, great question. I have a playlist on it, actually. I've been building out my playlists. I've been trying to, if you're regular, I'm trying to get to be a better YouTuber this year. So I have been reorganizing my playlists. So if you have a specific topic in mind that you're looking to learn more about, consider checking out the playlist. Okay, let's do some questions. Let me just check to see if we got any. Again, if you did not fill in a question, oh, we got several. Look at this. You guys came in clutch with this. Okay, we've got Robert through Lee. Couple questions here. I'll try and do rapid fire. Again, if you'd like to ask a question, it's in the description of the live stream. Okay, so first question is from Robert. They've been trading for 1 to 3 years. Their primary goal is to become a funded trader. And Bitcoin of retest of 88K is happening. What's your take? I don't know that it really broke decisively enough for me. Oh, there we go. No, it is breaking. I thought you meant like it's breaking and retesting. Yeah, no, this looks good. We talked about this yesterday. Actually love this setup. Thank you for dropping the comment. Something like this, I may actually be interested in taking a little bit of a bite on Bitcoin, taking a long position. A little bit of a weird story with Bitcoin, right? Bitcoin usually following suit with the NASDAQ and is following suit today, like NASDAQ's up too. But Bitcoin holding up much better here recently than many people, myself included, expected on this kind of sell-off in markets. So Bitcoin looks really good. I'd be looking for a pullback, and I actually do have a reading on the Edge Finder, so that might actually be a trade for me. So if I take that trade, I'll share it inside of the VIP Discord and let everybody know there. If you're not in there and you'd like to be, we'll drop a link here in the chat to where you can speak directly to our support team about joining the VIP Discord if you want to trade alongside me. Okay, Loris is up next here. Trading for less than 1 year. Primary goal is other. Why do you keep promoting CFD brokers, saying that CFDs are a good financial instrument? Research, da 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 da. So CFDs are not legal for U.S. traders simply because they are leveraged products. But just because something is not available to U.S. traders, I mean, there's lots of things that U.S. traders can trade that others cannot trade. CFD brokerages also, if you're asking me about whether or not CFDs are worthwhile, I think that is a far less valid person to listen to than to the regulatory entities that look in depth to brokers, like for example 8cap, which is a sponsor of our live streams, or Vantage, right? These things are regulated by much bigger entities, smarter entities than just me, and so if we're taking that for what it's worth, there's whole research people that dive deep into the topics of that sort of thing. So safety brokerages are not inherently bad. There are sketchy ones out there, but if you have something that's well regulated, that to me is a check mark. CFDs are legal in the United States just simply because of the leverage that they're offering to U.S. traders. It's not because they're just inherently bad. There's just more strict leverage and margin stuff here in the United States. Casey, been trading for 3+ years. Goal is to find a profitable strategy. What do you think NCLH looks? I'm not really sure what that is. I'm going to skip your question. Maybe I'll come back to it, but I do only have a couple minutes here and I want to just keep going. So apologize for that. Kaiseri, trading for less than 1 year. What is a basis point and what does it have to do with financial markets? So basis point is just a fancy jargon word. Basis point, 100 basis points is just 1%. So if you hear the Fed is raising interest rates by 100 basis points, just means they're raising the interest rate by 1%. Just a way of denoting units. Dan says they've been trading for less than 1 year. How to find good trading setups every day. Simply put, if you're a swing trader especially, you just don't. There are many days where I don't have great trading setups and I just have to wait for them. So for example, we just got done talking about this Bitcoin idea. Like, I like this trade quite a bit. But for me, that might just mean waiting for this pullback. And what if we don't get it? Then I didn't get a trade setup today, right? So wait for your system. For me, I use the Edge Finder. I'm waiting for these biases to marry up nicely with the technical readings that I'm getting on the charts, taking trades. But sometimes I'm waiting for them to come to me, and sometimes that just takes time. So patience, back testing, and using a system. Jeremy says they've been trading for 1 to 3 years. Goal is to improve their trading psychology. Nick, you've helped me to become profitable. Thanks. I thought I'd feel different or things would seem different, but it's just execution right now. Your rants keep me in line. Don't stop. Simply put, my motto helped me become profitable. Don't crash out, learn to lose, stick and move. Hey, respect, and shout out Jeremy. Congratulations on reaching profitability. That is no easy task for any trader to reach. So shout out to Jeremy. I think I'm glad that the content helps. At the end of the day, it's a lot of execution. It's a lot of practicing, a lot of testing things out, and just minor improvements every single day. But yes, becoming profitable, in my mind, when I first got started with trading, my thought was like profitable traders on YouTube had some secret they weren't telling me, and they sat around and just like printed money in the markets and they were never in the red. Like, that was my thought of what profitable traders were. Simply put, it is not the case. Profitable trading just means that you make educated guesses. You're wrong often, you're right slightly more often, or when you're right, you make it count. Your risk reward is really good. But it's not like it's not glamorous, right? Profitable trading is just you're taking punches, but you're hitting harder than you're getting hit, right? That's what profitable trading is. It's not pretty. Hi Nick, why do stocks plummet even after a positive's earnings beat? Lee, great question. In terms of earnings for stocks, most of the time it is about the forward projected earnings, or there is very high expectations for earnings, There's also this like concept of a whisper number, for example, especially with like NVIDIA. So let's say they beat by 5% in terms of their net income, right? Or net earnings. Sometimes the stock will sell off because the earnings expectations are simply so high. So anyways, when earnings expectations are so high, even a good beat may not be enough. Like let's say the whisper number, or like let's say the expected beat is like 5% beat. But then the whisper number, like on Wall Street, they're really thinking like, oh, probably 8-9%. And then you get like 5%, the market may sell off because, again, didn't exceed expectations enough. Stocks are interesting like that. The other thing is the forward guidance is really important for stocks. Like how much are they forward guiding for? Are they improving their earnings expectations? Companies put out their own expectations. Okay, going to keep moving here because I got 2 questions to get through. Adam says they've been trading for 3+ years, looking to learn more about fundamentals. Hi, is the U.S. economy or the U.S. dollar getting weaker in correlation with gold? Since gold is flying high in prices and the U.S. has the most gold, should the U.S. be benefiting the most out of it? It's kind of confusing. Good question. So the amount of gold that the United States supposedly has in Fort Knox, whether they do or whether they don't, there's people who love to have conspiracy theories about all that. But even if they have the amount of gold that they expect, it's not like massive in comparison to the entire GDP of the United States. So even if the US benefits in that way, if trade negotiations worsen the economy for the next 10 years or whatever, like let's just say a worst case scenario, that's going to way more net negative hurt the economy than the price of gold rising would, right? Assets rising in value are not necessarily the same thing as growth in the economy, right? Growth in the economy is going to be way more key. Normal says they've been trading for 3+ years. Primary goal is other. Hi, Nick. Good evening. I've been trading for more than 3 years, and I'm in the beginning trading stage. I have been alone without any happy enjoyment in making alone with trading. It's still same now, and you face in the beginning stage. Sounds like you're just struggling with kind of perhaps the loneliness and the enjoyment stage of trading. What I would encourage you is that if you are lonely, consider joining a group genuinely like ours. We have a great Discord community. We got some great people in there. Check that out on our website, a1trading.com/VIP. Yes, it is a sales pitch, but yes, it is worth the money. If you are looking for a good group of people to join, there's some great quality people. A lot of them are in the chat here. A lot of them are actually like the next guy coming on. Alan's a member of our community. Like we got great people in there. So if you're looking for a proper community to join and trade alongside other people who actually, are looking to help each other, I'm telling you, we've got one of the best groups. I have conversations every single day with wonderful people within our Discord. So consider joining us. It really is worth it. The alternative, the other thing is, you can try and connect with traders and meet people locally if they do that sort of thing. And then the other thing finally is simply put, just spend a lot of time back testing. It really is the truth. If you're trying to find that consistency and you're lacking it, back testing is something that traders know they should do, but they rarely actually do. Okay, guys, up next, we've got Alan Perez joining the stream here. Last call before I throw over the show to him. Edgefinder sales going on right now is 45% off. If you have questions about that and you would like to take advantage of that discount, send us a direct message using the link that the producer provided here in the chat or in the description of this live stream. Okay, guys, real quick break, and then we got Alan Perez coming up next. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good morning, guys. How you guys doing? I guess to piggyback on what Nick was saying, I kind of heard briefly about the gentleman or lady that was saying that they were pretty lonely. I agree. I mean, I do this for a living. I'm, This is my only income right now, and it does get quite lonely, especially when you have your spouse going to work. And so I'm pretty much here in my office. So joining a community definitely does help, and that's what I did with A1 trading. You guys have been really good community members, and I'm pretty active in the Discord and always open if you guys have any questions or just want to chat trading. I love doing that stuff. So, but yeah, just looking at, I see you guys were arguing, I think, about CFDs. Currency strength chart here. We got some divergence as far as safe haven. So yen is pretty much, well, net yen is fading now, but Swiss was at the bottom. Dollar is the second leading strongest currency. Everyone else is in the middle here. I did notice that we're getting some fades in Aussie, Euro, stuff like that. I think the gold is now pulling back a little bit, but I mean, I will take this with a grain of salt because every time we get this bearish candle, we just rip another couple percentages. So that's my thoughts on gold. But one thing I wanted to look at, if we just hop on the daily chart here, look at the yen. Yen is at this key level. Swiss franc broke this level, but like, we were in this range for the Swiss franc. As far as looking at this right here, this was Swiss franc last week for the most part was just range bound. We broke below, but now we're back up. So I don't know if this was a fake out. We'll see how this plays out. But if we continue to stick in this range, I could think maybe, whenever a trend reverses, we consolidate for a bit and then continue upward. It's not always just a quick snap back. Dollar Canadian also something really interesting. I took a stab at this actually. So my thought process was this was previous resistance, now potentially turning into support, especially looking at the other majors like the yen and the Swiss franc. Well, the yen mostly was at that nice key level as well. And then at this level, we're at the bottom of this range here. So really good risk to reward, super tight stop. And for me, a tight stop is 50 pips. And my first target would be actually something like this, 300 pips, then 460, then the 600. So we'll see how this plays out. There's a really good chance though I'm going to get stopped out. So I'm not going to go ahead and put heavy size at all. In fact, this is a really, really small position, taking a stab at potentially a reversal in trend. But yeah, that's pretty much it as far as what I'm looking for in the immediate term. Dollar index broke the 100 level, which is concerning. So that's why I'm not really going heavy size or anything like that. If we see this support level got broken into, and so now we have so much room to the downside, which is something that you have to be really mindful of as well. You're also long dollar CAD. I think it's a interesting one, right? We do have oil prices kind of coming up a bit, but if we do see some continuation in oil prices coming down, we could see some more continued weakness in the Canadian dollar, and dollar CAD could actually continue to kind of rally up. So as far as for gold, or not gold, oil prices, because Canadian dollar is really dependent on oil prices. So if this level holds, it looks like we could have started tapping out of this one, but if we get it here and reject it and continue lower, then dollar CAD could continue to play out pretty nicely, in my opinion. But honestly, y'all, seems like pretty much same old, same old. You got to be really cautious. One thing about the euro dollar that I saw was that we were in this range, and this could be the similar price action to dollar Swiss, where we were in this range. We broke out, but this could be a fake out, and we'll see. But longer term, at least for now, we could see a pullback. My level is still right here, the 112 levels where I would like to go long, but we are already so much overextended. I don't know if we can get back down to this level all the way. So that's my honest thoughts. If you look at a fib, low to high, that's a bad fib. Let me go to the daily. Fib here, I mean, we could look at different levels, right? Different lows. If you go like from, oh snap, that's not a fib. From here to here, the 50% retracement level is still this 112 level. So that's what I'm looking at. If we look at the fib from here to here, a little bit below the 112 level, but the 38% pretty much aligns with the 112. So we'll see. This thing is stair stepping with strong momentum, like how we've been having small pullbacks get bought into fairly quickly. And this is a really strong market to trade. So going against it, you have to be very strategic about that. Cedric, where am I from? I am from Houston, Texas, but right now I live in Chicago. What were you guys talking about, CFDs? I'm curious. Looking for UJ sales as it goes up slowly. H ball out. Yeah, I think longer, like if we're thinking longer term, yeah, selling dollar yen would be pretty good. Maybe at the 145 would be nice. I agree with you there. But I want to see like we're at this big zone right here on the daily, right? If we just flush below it, then we might not even see that pull back to 145. It might just keep dropping. New Zealand dollar and Aussie dollar. Let's see. Aussie dollar has been hanging out at this level. This was a big level. Whenever we broke this, we've been holding it pretty nicely. And it's been holding up. And we got to think about it too. This thing appreciated with like what, 450 pips? Yeah, 470 pips. So yeah, maybe. And this was a straight shot up. I mean, this was day after day after day of bullish candles closing. So this level could hold it in the past. So I don't know. We'll see if this thing breaks, then the momentum is clearly very strong. But I could see this kind of holding this level. I think New Zealand has New Zealand just broke right past it. These are really difficult ones to trade. If you're not long on it, going short could be pretty tricky. One thing I was going to say, though, as far as Edge Finder, I did notice something. If you look at the eco, let me see if I can pull this thing out. Euro dollar or pound dollar right here. Oh, that's a thick one. Pound dollar got a lower reading. The euro dollar also got a lower reading. They were like 6 or 5, I believe, before. And so now they're starting to taper off, which is really interesting. And then if you look on the flip side here, let's see. Oh, wow. This changed. UJ was like minus 12 or minus 10. Dollar Swiss was like minus 8. Now they're like minus 2. They're like on the fence, minus 3. As far as the eco version goes, I could imagine it's different on the original top setups page. And then also dollar CAD is now getting a 1 reading. So I did notice that on the economic key maps that we have, things are starting to flip. So we got a positive retail sales, GDP growth is good for now. We got the manufacturing PMIs that came in a little bit softer, but we have strong employment data, and CPI came in good. And what I mean good, like, lower inflation. So we'll see if this thing starts to flip a little bit blue. If we get some more growth data coming in strong, that could fuel more dollar bullishness. S&P 500, tricky one. Just technically speaking here, if I put up this trend line for the S&P 500, this would have been a perfect time at this level when we approach for bears to step in. And it seems like they did. So now it's just a matter of seeing if we're going to hit this level again and then continue lower, or we're just going to hang out. I remember my brief conversation with Chris Pover, and he was mentioning how this low right here is pretty much pricing in the worst case scenario. So he said, probable cause is we could just hang out here for a while until something new comes out. And I asked him, well, if that's the case, then what would be something new that sends this thing lower? And I think one of the things he said was pretty interesting is, well, you got to bring in something brand new that's worse than we've already heard. And I think one of the things that the market has really put some emphasis on, and that the president has been pretty vocal of, is his, disapproval of Fed Powell. And so that, I think, did kind of fuel some more uncertainty in there. But another thing he said is that, if countries go ahead and start forming alliances like Japan, Korea, in China, how they were going to, join forces and retaliate against the US, but it fell through. Things like that could also fuel this thing lower. So we're like at a really interesting spot here. I want to see if this is a bottom. Same thing for the NASDAQ. If we hold this level, break above, retest it, and continue upwards, that could be a good sign. But it's kind of too soon to tell, in my opinion, especially with the VIX. Yesterday it went up above 30s. Now it's starting to taper a little bit. But if we get back into the mid 20s, like 25 and below, I think that'd also be a good sign. The Dow is actually a better trade. Not true. Another impulse up is coming. It could very well, like if things start to settle down, and yeah, I would hope actually while out that we do get another leg up. Trump will come up and announce deals. So yeah, I read something over the weekend, and it said that 15 deals as of Sunday were pending. Now the name of the countries weren't put out there, but 15 countries are negotiating deals. So I think if those 15 come out, or more, or even just some of them coming out and being solidified and saying, hey, like we got these deals coming through, that could actually fuel some optimism into equities. H-Bala, no one understands how China economy is in deep crap. I agree. Actually, I'll tell you this. Yesterday I had a conversation with my dad, and he was saying, like, he was pretty concerned, right? Like everyone else. And the standard 60-40 portfolio, like Chris always says, is bleeding pretty badly here. I think the new wave, as far as like retirement portfolios and building them going, is like, instead of bonds, you would probably do a combo of Bitcoin and gold. And so those portfolios, those newer ones, are holding up pretty nicely here. So my dad called me. He said, so what's going on? Are we going to go lower? And I'm going to say, Dad, I have no idea. We could or we couldn't. And so he was pretty concerned. But like H. Ballout said, it's not just one-sided. Everyone's bleeding, and it's in everyone's best interest for things to go and deals to be made. So we got to keep that in mind and just think logically here. Longer term, yeah, we could go lower, but it could be a good opportunity because it's in no one's best interest to have a trade war, And so if you just think of a longer time horizon and you survive, you could actually turn this into a good thing. Mind you, between him and China, President Xi could well do that. Pound dollar. Pound dollar is probably the strongest one out of all of these. We're having this little candle here, but we still got almost 7 hours to go for it to close. We could see, I don't know, maybe we can go down to this level, the 32.5, and then continue upwards, or we can continue downwards. Honestly, this thing's very extended. Trading above this level is like really hard because you got to think of your upside could be limited if you're just looking at this high, but then your downside could be all of this move right here. And so that's something I'd be really careful. And I actually, now I remember what I was going to say. My dad asked me if he should pull out his money and go into gold. And I said, well, it's a little bit too late to go ahead and transition like that if you're going to realize some losses. And I think a lot of retail traders are having this dilemma where they're like, should I just buy gold? It's going up. Well, let's look at your upside for gold. Let's go down to the weekly chart. If you look left on the chart, your upside is undetermined, right? It could be infinity, but we also have to think logically. So if you're buying gold at the top because you're scared, you have all of this downside below you, like literally. If you just pull up a moving average, you have this 200 way below that hasn't been tested in forever. This is a 40% drop. So I was telling my dad, let's think of it both ways. if you're going to liquidate your losses on the equity side because you're scared, and you go into gold right here, your upside could be another 5%, maybe 6%. You know, that's pretty logical. But your downside is 40%, 20%. So is that a good risk to reward? Is that something you're willing to do? You know, now if we were having this conversation 2 months ago, then that would have been probable, but that's not the case. So jumping the gun, getting in right here is not smart. Invest in Alan. I like that. I bought your at 105, been holding, selling at 1.2. Oh wow. Slow burn. If you bought your at 105, you got some discipline, my friend. You got some discipline, because some people, including myself, I've been guilty of this for sure, is they sell on these rips instead of just letting it run. So one thing that I would say is that we could very well pull all the way back here, but longer term, we could definitely go ahead and hit 1.2. It's possible for sure. H-ball out equities over gold any day. Yeah, if you think long term, for sure. I mean, that makes the most sense. But let's a lot of people are feeling the pain right now, and they're concerned, and it's probable, right? You got to realize that some people are getting close to retirement, and their buying power is fading, and they're like, well, if I'm going to retire in X amount of years up and coming soon, what do I do? They get scared. So definitely, it's a lot of people are feeling this way, and think about it. It's not just my dad, one individual. It's millions of people that are in this boat. So, in fact, I'll go over something interesting too that I saw on the COT positioning of last week. We saw that Nasdaq got bought out, right? 4% net change. However, S&P 500 got a minus 3.29% change. Now, you could say that's really bearish, which it is, right? Net change of negative is a bearish thing. But look at what really happened. 33,000 short contracts were taken out of the market, but minus 66,000 long contracts were taken out as well. So that's why you get that negative pressure. So it's like money coming out of the market. It's not necessarily more bears stepping in and adding more selling pressure. It's just that more long contracts were removed rather than short contracts. So that was something that was pretty interesting that I saw as well. Let it get down to 3,000. I mean, yeah, man, that'd be a humongous wealth generating opportunity. If we break down these lows right here, continue lower, and then clearly we're in a bear market, and by definition we are. Bear market is 20%. S&P 500 hit almost 22%, and Nasdaq went well over 20%. I think it was like 28 or 26. Yeah. What's my view on New Zealand and Australian? Okay, I see that question. I got you. 24. New Zealand dollar got bought up pretty good, 2.89% net change. But it was more of short contracts being removed than added. Australian dollar, I can look at the same thing as well. Had a bearish change, so these are the contrary, right? New Zealand got a really positive reading, but Australia got a negative one. 13,000 short contracts were removed, and 8,700 long contracts were removed as well. So if we go to the chart, we're super extended. This is a weekly chart, by the way. Let me go back to the daily. Super strong momentum. I don't like the price action on New Zealand dollar, so I'm going to skip that. Australian dollar is interesting because we're at this level. This was support at one point and can now turn into resistance. So what I would look for, 24, and it's going to take some patience. something like this or something like this. Getting in prematurely is difficult because your probabilities kind of dwindle if you just trade right here and anticipate one or the other. So much strong momentum that if this thing breaks and retests, the momentum is very, very strong and you can continue upwards. Or if you go like this, break below, break and retest, then this level could actually hold and respect, and then you could see some movement lower. So out of the two, I would prefer Aussie dollar, and that's what I would wait for. Yeah, HBALA, I'm the same way. I think if I'm looking at these pairs, I didn't want to say that. I didn't want to give a bias because I think both, scenarios are very probable, especially in the market where you're uncertain. But just look at these extensions, right? Aussie dollar up, euro dollars up, kind of getting some fade back. Pound dollar, you could say that, not really. New Zealand dollar as well. I would wait for these pairs to pull back and then buy. So if I had an opinion, this is just an opinion, I would think something like this is more probable. However, momentum is very strong and I could be very much wrong. So take that with a grain of salt. New Zealand yen. Yeah, Timmy, I got you. And then and when I'll also go over Aussie yen as well. Let me get a clean canvas for you guys. So yen long term is very strong. That's my viewpoint. Now, if we think about it, like we just discussed, if we do see some pullbacks, New Zealand yen and stuff like that, then this level could hold and we can continue lower. However, we also have to think that the yen longer term is very undervalued and has so much upside potential. So I would see this pair to the downside. And similarly, Aussie yen could also get the same treatment as well. Both in a clear downtrend. I mean, if you want to be patient, I don't trend lines. I prefer horizontal levels. So if I'm just looking at this technically speaking, I would probably get in somewhere like this. If we can get to this level, put an alert if you want. That would be the setup I would look for. In fact, I like that setup. So, put an alert on this thing. If I go down to the 1 hour to just refine, I like this right here. Put an alert. Let me go to the edge finder, see what it's looking at right now. I know we're premature, but okay, it's pretty flat reading. This could something I could look for. If this turns, this was support, turn into resistance, we broke, strong momentum to the downside. Yeah, I could look at something like this. And then as far as risk reward, let's see. I like, okay. Risk reward, I like something like this. Where it's at now. So if I'm looking at this long term too, if we break this, we could go lower, right? Obviously. So I'm going to give myself 2 shots at this. This is my first one. My second attempt will be something like this. That would be my 2 attempts. Then stop would be something like this. That's what I'll do. I hope I get to this level. I hope my first attempt doesn't work out. That way I can get a better entry and then my risk reward becomes way much better. So that's my thoughts on New Zealand yen. but we could definitely get some upside in New Zealand yen for now. So I wouldn't just go ahead and sell right now. And I say that because I'm looking at dollar yen. We're at this level as well, which is obviously similar to, it's currency versus the yen. I could see us kind of going back up. So if we get the treatment of, you know, bouncing off of this level for dollar yen, right? We could also bounce off of that level on New Zealand yen as well and get a better opportunity to sell that market. You're welcome, bro. Yeah, wait for correction up in sales. Yeah, I wouldn't really chase price in this environment. But I believe we got Chris Pulver coming on soon. Let me just wait for confirmation on that, and then I could head out, guys. But until then, any last requests? Oh, I saw a question. How do you do your taxes once you're a profitable trader? I'm not a tax advisor, but if you qualify, you'll do mark-to-market election. Depending on your situation, you can do you can trade out of just your social security number, or it might be better to do an LLC if you have a lot of expenses. It's a lot of things that goes into it, but depending on what you trade, what assets, you have to make some certain elections to go ahead and make the most out of your tax situation. See you, ball out. Thanks for sticking around. Take care. I believe I got some time. I think we're going to wait on Chris Pulver for a little bit. So yeah, that's what I'm looking at. I want to see this level hold. Dollar index as well. We did kind of break below, but this could have been a fake out. We never know. Euro dollar pulling back. Ultimately, I want to see something like the 112 level. Dollar Canadian was my first attempt at going long this thing. Hopefully it plays out. But like I said, landscape can change. That's why my stop is pretty tight on that one. Dollar Swiss, similar to the euro dollar, could have been a fake out. This could be a shift in momentum. Dollar yen as well. I want to see this thing hold. If we can get it back up to the 145, depending on what the fundamentals are, looking like and what the landscape is like, I could either short this pair. Aussie Swiss, yeah. Clean canvas. Dang, this thing is super weak, man. Is this all-time lows that we're at? Dang. Okay. Interesting. Aussie Swiss. I don't like it. I'll be honest. Aussie Swiss. Fundamentally speaking, how's Aussie Swiss doing? Pretty flat reading. I don't know, man. You pretty much stumped me, Lee James, because this thing is obviously at its lows, longer term bearish, right? So it's not like we have so much upside if momentum is to the downside here. I would stay away from it, to be honest with you, dude. It's not my expertise, so I'm not going to give an opinion on it because I don't want to guide you in the wrong direction here. But if momentum's to the downside, I'll just wait for some pullbacks. Chandler, I have a quick question. Is Chris on, or am I here for a little bit longer? Or what's the schedule looking like? Oh, okay, cool. Thank you, sir. Yeah, Roki, that was my thought process as well. Like, we were really extended on dollar CAD. When we had the initial Trump trade, the tariffs, this thing would explode hundreds of pips. and then retraced back down, and we got pretty extended, and we were in this range on the weekly time frame, which is great. And then now we're at the support level. So those are my thoughts. Mr. Chris Pulver is here, so you guys are in good hands. Thank you guys for your time and for watching. You guys have a blessed one.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, welcome back. Happy Tuesday. Thanks, Alan, for passing that over. And apologies for, I think, last week with my flub of your name when I got off the call with a coworker, Alex. So, Alan, won't happen again, as I said last week. All right, S&P is up a little bit today. I've got some trades running at SPX. I'm looking at the SPY this morning. We've got some gamma levels at 525. We have some 529s. We have a gap fill from yesterday around 526 and change. I'm going to look and see. I was looking at a call option on SPY. So let's go SPY. I might look at a butterfly spread here in just a second. So 0 DTE. This is back up to about where we started. Let me see if I can put a butterfly spread on this. And it's going to be close. I'm only $1.90 out of the money. I don't know if this is going to turn into like a monster winner. I don't know if it will, but let me do a quick butterfly call spread. And if I pin that at 525, so the question is, can I turn this into a, from a 30-cent debit to maybe a 50, 60-cent winner? If we get there, and I'd like to go a little bit further out of the money. It's probably just better off just to frickin' do a call option. It's just a little bit more pricey to do a call option. So what am I going to get here? This is a 35 delta. I'm looking for about $1.70 move. So $1.70 times 35. So about 60 cents on the dollar. I mean, that's not a bad return. Is that worth it? I'm gonna wait. I think we get there today. Let me see what this spread looks like. If I go butterfly, pin at 25, equidistant probably for $2. So that's a bit pricier versus an inexpensive one that I might be able to double. So let me go 2 contracts here, see if I can turn 30 cents into 60 cents, maybe double this trade. Try to grab a couple of bucks when we hit 525 today. I do have some time. Let's see if I get this thing for 30. Try 32 cents. So I'm going to take a trade right now. 34, 30. I mean, this is above the ask price, dude. $33 debit or 33-cent debit. 35-cent debit. All right, filled with 35 cents. So if you want to take this trade with me, here's the deal. I sold the 525 call with 2 contracts, and I'm going equidistant $2 wide, so a 523 and a 527. So the way this trade looks is, I'll just type this out on the screen. So this is, and I'll put this in Pulver Alerts, but I'm trading it live. So here's the deal. It's a SPY 4/22 expiration, sell 2 at 525. I guess it's sell 2 calls. Sell 2 calls at 525, and then buy 1 call at 523, and buy 1 call at 527. So that was a 35-cent debit. Ideally, I'm looking for SPY to hit 525 today and see what this trade is offering. Okay, I should see a 35-cent debit offering, maybe a 50 to 60 cents credit, and I'll look to protect. All right. So it doesn't have to be anything super fancy. Give it the day. I think 525 is a gap fill from yesterday on the SPY, as well as a decent liquidity level and gamma level that I'm watching for the morning. So, and if I lose, it's 35 cents, I'll take the small loss. But these trades have the ability to pay, upwards of 5 to 1, 6 to 1, even sometimes up to 10 to 1. It's not too bad for a 0 DT. Okay, so we'll see. I'll give that one some time. Otherwise, I've got some SPX trades that are running this morning, and they should be looking a little bit better. So this is my SPY. It's going to be a butterfly there. And then my SPX trades this morning. About just under break even. So they're a little bit higher on the call side. We're at 5247 with an 80 and 85 call side that I'm going to keep an eye on. So a little bit of red goes a long ways as far as recentering the SPX. So SPX right here, recentering would be helpful for my little SPX trade this morning. So hopefully a little sideways, hopefully a little red will help, and I'll get a couple of profits on the SPX trade this morning. P&L wise on the day, pretty good day to start, up about 40K, right in that kind of break even point. Like, I mean, break even for the year, I'm willing to accept that a lot of it is still like fluctuations and option prices. Big news today after market, we have Tesla earnings. That'll be an interesting result, whether it's, I hope it's good. I hope Tesla's great, but I'm prepared for some downside in case it doesn't deliver. I looked at an earnings summary this morning. It's pretty mixed. We saw a lot of companies this morning that like missed in revenue, but stock was up a little bit. It's kind of hit and miss. Didn't see any major jumpers. A couple of them that printed yesterday. I want to say, was it Calix? That was up like 13%. CALX was the ticker there. Today, before the market opened, Verizon was down slightly. Netflix actually is back up and retested some highs. So I'm keeping an eye on Netflix out for this week and next week. So let's go to the charts. Netflix is at 1051. I'm looking for a little profit here. I took the trade for about a $3.20 debit. I'm looking to try to get $1 out of that or better. Max out at $5 by next Friday. So if we hit all-time highs on Netflix, I'll probably end up taking some profit. Okay, let's do some top bottom here. Everything's up. S&P up 1.65%. SPY's up a little bit higher. MAG's looking a little bit better for now, but there's still, MAG's is going to have all the earnings print between this week and next week. Pretty sure all the major ones outside of NVIDIA. NVIDIA is like late May. But your Apple, like Google is this week. Tesla's today after market. Google is on Thursday. Next week, I believe you have Microsoft, Meta, and Netflix was last week. So your big stocks, kind of your hallmark names are printing earnings this week, next week as we heat up. So earnings season is underway. Let's keep an eye out here. So about 1.6% on the S&P. NASDAQ up a little bit better, 1.9, 1.93 on the Qs. Dow's up 1.75. Russell up 1.2. Sold some calls yesterday in IWM at 200 for like, I think it's $5, $5 or $6 on a covered call. Just looking to repair to see if we get back to $200 by May. VIX is down slightly. Let's take a look at the VIX. VIX retreating is probably a good sign. Bond volatility is back up. This is not a good sign. This is, bond market option volatility. We're back up. The 10-year yield has not gone lower. SPXY. I did buy some shares. I dumped this thing for about $1.30 per share. So we had a little bit of a rally. I bought it around 35, 35.50. I've dumped it for about $37. So I didn't want to hang on to this one. I'm still waiting to see. I don't know. I don't know. Maybe there's more volatility ahead. Maybe this thing is easier to trade at the same price, maybe lower. But I'm just not looking to get crazy aggressive in case we have another vol spike. If we have another vol spike, this thing goes lower, right? So I'll probably take some dips. If a little more confident we can revert on volatility, then I'll buy some more SPXY. Dollar index, currency strength wise, we have today the Japanese yen was strong and then back down. The dollar's coming back a little bit. Swiss is weaker. Kind of happy to see that, but the vertical axis is lower. So not a ton of movement as far as Swiss franc weakness. Watching gold, of course, gold hit $3,500 an ounce, I believe, this morning, and it's faded slightly. Dollar is watching lows, right? Like keep an eye on your lows. I think the dollar is still an active sell as long as we see this support act as resistance, or as long as you're watching a lower time frame. Look for pullbacks. I talked about a bottoming formation. If you're anything short the dollar, so your Aussie dollar long, euro dollar long, pound dollar long, New Zealand dollar long, dollar CAD short, dollar Swiss short, the dollar index has moved enough. The dollar index, by the way, is off to one of the worst starts since 1995. 30 years of dollar price action. This is as bad as it's been in 30 years. So pretty crazy. But if you're trading FX and you've got some dollar profits, move those stop losses, because I do think we are due for a correction. There's still some symmetry down here. So any pullback could still continue to symmetry. But at this level, I wouldn't be surprised if we end up making a decent pullback towards support to become resistance. And then we see if this is a bigger, more permanent trend on the dollar, then at the 100 to 101 zone, we look to see if that resistance holds and we can resell the dollar again. Okay, oil. Oil at 63.24, off of the April 9th low. It's fine. I don't really have a good direction on oil. I talked about this yesterday. If oil comes back down to revisit the lows, I'm probably going to look near-term long on oil. Gold, pretty nice wick to the north. As far as there could be some profit taking. Pulled some data out yesterday. Gold seeing record inflows, and we essentially have a housing bubble in the U.S. Global ETFs performing well that are non-U.S. So, I mean, most of the Eurozone, this is money leaving the U.S. and repatriating back home and seeing, local ETFs do a lot better, or local, country performance doing a lot better. Eurozone EZU at 13%. So that's actually a good one. This would be a global ETF scan. So most of Europe doing pretty well still after a big shakeout. Emerging markets. I mean, this is kind of wild. It's like emerging markets are performing better than the U.S. right now. Yikes. So we'll see. I mean, time will tell. But just more frustration out of the U.S. The noise. It's like, I think Trump called out our Jerome Powell and called him a loser yesterday. It's like, cool, good, good etiquette, I suppose. Look, I don't think just trying to bully the Fed into cutting rates is going to do anybody any favors. I think that the victory lap of the U.S. is way too premature. Saying that we've got this, this trade war stuff is working, everything's down, there's no inflation. It's like, that's total BS. The yields are up higher than Liberation Day. There is no evidence that suggests that if the Fed is going to cut rates and be forced to cut rates, that it doesn't respond the same way that it did last September. That is my biggest concern. If anything, I would say the Fed shouldn't do anything right now. And naturally, this is a noisy event in the market. All right. If we do anything reactive, I think the bond market sniffs it out, and I think we go higher. And that is the exact opposite scenario. So how would Trump backpedal that? I mean, blame the Fed most likely. It's like, well, they cut rates. They were too late. They were too late. No, like if they don't do anything, there's a chance that this can just settle down. You know, is there a chance that rates can settle back down? I would hope so. Is there a chance that yields could lower a little bit and actually see bonds go up slightly? Maybe. You know, I mean, TLT is still in red, hitting back to lows. We're sitting in like a 4-year nasty drawdown in bonds. Maybe if we're lucky in the TLT side, it holds this area of support, but you just don't know if it's going to be the trade-off where this offers safe haven cushioning if the stock market is dropping. I think, within reason, we actually have some signs of the market finding some lows, whether those lows are, revisiting the April 7th low, or we have a little wave structure like I talked about yesterday, which was swing up from the 7th to 9th. That created a big swing, and then we pull back. We faded at the high. We pull back again. We tested that low yesterday. I could see this move happening. So if this is the start of the markets coming back up to retest highs, that wouldn't surprise me. Am I getting crazy bullish right now? No, not even close. I posted some videos on my channels and sent out some updates where, look, I'll get a little bit more bullish if we revisit lows. I will start reestablishing hedges up here as a just in case if we start revisiting this cluster right when all this thing started on this first breaking point. And I'd be pleasantly surprised if the market finds a way to break through, 57, 5800 and get back to all-time highs. This would be like the surprise. This would be the expectation, and this would be I've got to be braced for the downside. It's like I've got to be ready for anything, and I think all of us do. None of this is going to feel easy. This is some of the most confusing commentary narrative every single day. It's like we're seeing gaps intraday, or gaps like every other day is like a 0.5 to 1 to 2% gap, and then you kind of deal with the intraday price action. Sometimes it's aggressive, like yesterday's intraday price action was pretty aggressive. Today's intraday price action so far is pretty quiet. Pretty quiet here, pretty aggressive. Just it's every day is a new day, so it's kind of wild. All right, let's go gold and silver. So gold, a little bit of a rejection candle, doesn't necessarily mean anything. This could still offer up a nice little buy on the dip. I mean, look, this is a daily time frame. I'd love to see some type of pullback on a daily time frame that actually matters. My question is, I've been talking about this a lot. Obviously, I'm expecting like a bigger pullback. Okay, but even a pullback to the 21 period might offer another dip to take this up into capitulation type highs. I'm not sure. I was curious if the dollar had to pivot really hard in order for gold to pivot, but that may not be the requirement. So I don't see gold at 34.36 and think I'm going to buy it right here. If I'm going to buy gold, okay, if I'm buying gold here, then I have to be prepared for that being level 1, that being level 2, that being level 3, and that being level 4. Like if I'm going to allocate whatever it is, if I'm going to put $10,000 into gold, it's going to be 2,500 here, 2,500, 2,500, 2,500. That's how I'd invest it. I wouldn't put everything at the top. Although it may get there, it may not. But I need to be ready for, if we have a correction, I want to be scooping up that correction and then still maintaining a longer outlook on gold. Okay, silver. Silver actually green on the day, up 0.85%, and gold is 0.35. This is another chart to keep a close eye on, XAU versus XAG. If this retreats a little bit, then we might see silver, kind of slightly get the upper hand in relative performance, which is why I'm long both of them. So it's still a good trade on either direction. I just think that gold is a little bit overextended. Silver might be a really good catch-up trade if that's the case. Hopefully it is. Bitcoin. Hey now, Bitcoin. Breaking some recent highs. And, well, looks like we have some confirmation. Follow the price action. We are on the right-hand side of the trend line where there is some decent structure right here. Therefore, if we are breaking, if we have a flag pattern, that's one way to continue on with a Bitcoin trade. Or if we break the trend line, come back and retest the backside of the trend line, another opportunity to get long here, or we revisit lows on the right-hand side of the trend line. One of my favorite trades, if you see some good technical confirmation, is any type of pullback, buy and then be prepared for a area 1, area 2. But the nice thing about being on the right-hand side of the trend line is it gives the bulls some permission to say, hey, everything lines up, everything's confirmed. It's not the guess of the lows, it's not the anticipation of lows. This is looking pretty darn good. So yeah, I mean, a nice little move above 90,000, taking out these recent highs from March. Those highs are around 88.5. So, is it pullback first, or is it just drifting? Are we going to revisit, 108, 109? Time will tell, but this does look pretty good. Pretty good. Give me 1 second. All right. Somebody at the door. Okay, so Bitcoin's looking good. I still like gold on dips, just not excited about buying the highs. I love silver. I think that silver getting back to these recent highs would be pretty encouraging. I still have a measure move on silver towards 35.88, and I'm longer term on silver going into the 40s. So quick spot check on everything. CEF. Do a little bit of everything here. CEF is up around $4,700. GLD up around 24K. PHYS up around $4,700. SLV up around $9,800. So still going to ride them out. I think there's a lot of upside potential on silver. And I think there's still, bubble-licious type price action on gold. And I still want to buy dips on gold. I just want to see recent dips. And if I was going to allocate again, here's what I'll do. I'll say that I don't mind for my portfolio allocating like another 1 to 2% to gold. Okay, I don't think it's a bad play. It's been one of the few shining stars of this year's asset class performance, outside of being like totally non-US and trading basically like individual European countries for a little 15 to 20% bump. Not the play I really thought about this year outside of getting some non-US exposure, but 1 to 2% gold. If I were to allocate that, I would space it out over this entire area. So I'm just going to be pretty tactical with the allocation. I don't know if gold makes this correction, or it just breaks, pauses, and it just stays relentlessly bullish. But if silver can outperform in any capacity, then I'll still be happy with silver. But I think the journey is not done. And then Bitcoin turning up, looking pretty encouraging. Again, I can kind of add to the mix here, but I have trades. So BITO is down, but still collecting like ridiculous dividends there. It's not great. It's just dividends with a slightly lowering price. And then IBIT is doing pretty well. IBIT is up around 35K. So between Bitcoin, gold, and silver, I mean, I'm probably riding close to $100,000 in profit right now, and let it grow. There's plenty of upside for Bitcoin to hit recent highs. If Bitcoin does get back to these highs, that should put IBIT, which I had a collar trade out to March. I think I added in another one out to May. I'm putting it up here at the highs. So I don't really want to let this get called away. I'm going to roll it if I can. If it gets called away, so be it. But all in all, like, those so far are some pretty good diversifiers. Okay, MicroStrategy. This would be another one that would be a lovely trade to get called away. I've got about 300 shares of MicroStrategy and a collar trade where it's covered at 310. I don't want to get super greedy here. This is only out another maybe 2-3 weeks, but if it stays above 310, I get it called away. I could look at it right now, and I mean, I keep going back to this like market seasonality. I do think like Bitcoin's looking pretty promising price wise. MicroStrategy follows that to a leverage degree that perhaps a little income trade, and this is one way to look at it. So if I take my MSTR, there are my shares, there's my covered call, and there's my put. So I have a collar trade on here. Let me just label that. So collar. Right. So I was protected the downside in case things got worse. So I went out to June. Okay, I went out to June. And I think my break even is, let me check this one. I think I've lowered my break even to like 250. MSTR. 254.97. 254.97. Minus 310. There. So if I get MicroStrategy called away, I'm making about $16,500 on that trade. Not bad. So I could roll it, but right now I'm already out to June. I don't want to go too much past that, in all honesty. I mean, this waiting game for tariffs is out to the first part of July. So I think July 4th to July 9th is going to be the 90-day window. I think anything after that is a little bit riskier. Unless we have some resolution on the tariff side, July could be a pretty tricky month. August, September seasonality, you typically see some pullbacks. The September effect is a very real thing coming out of summer trading. And then, of course, everyone's wondering how Q4 is going to be from October to December. But if it gets called away, it's been a pretty nice repair. But anyway, I'll take the runs on IBIT. If just get out of MicroStrategy, that's fine. If I watch IBIT revisit some highs, I'm not going to complain about that at all. Copper still looking pretty good. This trade expires in 2 days. That should be worth about $1,600. Japanese yen still making some fresh highs. Nikkei behaving okay. I mean, year to date, I'm sure. Let me see what the Nikkei is year to date. So for the year, Nikkei pretty volatile. It is down about 14.4%. If we go to the SPX, year to date might be back into single digits. We're down about 10.87, so just under 11% for the year. So S&P still down double digits for the year. With our wicks, I mean, a lot of indecision, obviously, but I think 21% was about the high to low. High to low, about 21%. But Nikkei, there. Go back to the daily chart. Okay. So pretty strong support from the August 5th. Is that August 5th from last year? Yeah, August 5th bottom. Netflix crossing all-time highs. Okay, good. Let me check on a position here. Netflix is up a little bit of profit. I'm trying to go after, see if I can sneak in $50 out of this thing. So replace 3.7. $5. What would that winner be? That'd be $50. So 15% winner. Let's go a little bit higher. Try to get $1 out of that. So it'd be a 31% return if I grab $1 credit. Okay, Netflix is hitting all-time highs. One of the few bright spots in the markets right now. SPY, just let me take a quick peek at the SPY. If we're pushing up towards 525, I'm going to check that butterfly spread. That was a trade that I took this morning. So nothing crazy. It's up anywhere between 3 to 15%. So I'll just keep an eye on that one. If we hit 525, this hopefully is going to offer up a maybe 50 to 60+% winner. I'd obviously like to double it. That's what I try to go after butterflies. If I can turn a 1-to-1 or better, that's typically pretty good. So keep an eye on that intraday. All right, take this back to the SPX. Watch my levels. Netflix there. Let's go back into Japanese yen. Okay, so EWJ heading higher. I'm up about $4 a share right now in EWJ. So I just had two dollar cost average levels. EWJ, the accounts that have 46 shares, those are up about $200. I might just end up, I don't know, I might take some profit here. This one excludes about the bottom 15% of the Nikkei. So if this goes back up to the recent highs, I might just say good enough. And that would be up another, what, $2, $2.30. I don't know. I might be up a total of like $1,500, $2,000. I might just take the profit. So if it's a return, I'll take it, but without having to sit and hold and, hope that it goes crazy high. It's like this could be a big range for a while. DXJ didn't trade that one. DAX looking for a cup and handle. So even a pause here or pullback, look for a cup and handle on DAX. FEZ, same thing. I sold some premium in FEZ. The FTSE, I like this a little bit less. I keep saying this, but it's like I still like FEZ DAX better. But take a screenshot of this if you want to. These are some ETFs that would be interesting to track this year. Primarily, Eurozone. So what I'm curious on is I'm going to do some exploring on this EZU. If I invest in EZU, does this actually get the benefit of all these other countries as a whole? Like if this ETF gets some exposure into all these other countries, I'm just not looking to like, hey, let's chase Poland it's already up 35%. I'm not going to chase that. These ETFs, like who knows what they can do. If you came into the end of 2024 into 2025 trading year, you possibly saw the stat that the US has outperformed the world by about 3 standard deviations over like the last 16 years. It was like the biggest on record. So it's not a huge surprise that the US is down and the Eurozone is up, and it's closing that performance gap. So is this a permanent rotation? I don't know. I think it's a good diversifier trade this year until the US gets its crap together, and and then we'll figure out if the US is resilient enough to still make all-time highs. But anyway, it's been an interesting rotation. I know you might see some videos out there that are really exploring this, and like they're all in on Eurozone. And look, the Eurozone doesn't do anything good until the U.S. is probably showing some resiliency. We saw that kind of systemic risk a couple weeks ago. So I think the U.S. has to be resilient and has to still perform pseudo well for a lot of these other flows to maintain their performance that they've had so far in 2025. Okay. All right. So Argentina, one poke of the 200 moving average and it's back up. I missed the opportunity to go long there. China looking better. I'm looking for a cup and handle. Similar thing. It's like big flash to the downside. If this is a flush to a nice support level coming up here for a little bit of a pause or pullback, I think we can reestablish some longs. This run, in my opinion, has to be with the U.S. going up. If U.S. goes up, I think China returns, Euro returns, like everything looks okay. But if the U.S. is still struggling, I don't see these other countries, these emerging markets, these non-U.S. related assets going up without having the U.S. at least showing some stability. EWZ, this is emerging market stuff. This actually, if we're talking true emerging markets, Brazil, Latin America could be one of the better value plays of 2025. It's got a long ways to go, but if these lows hold and we get into a buy zone, there's a chance for this thing to, potentially double. So, looking at that list of mostly European stocks, but it's like the Latin America, Brazil space is plenty of upside potential. I think there's a lot of asymmetry there if we can get into a buy zone. Cedric says, how old are you? 42. I'm glad it looks like I'm in my 30s, but I'm 42. I'm an old man. All right, ILF Latin America. MAGs, Tesla and Mags, other Mag 7 stocks reporting earnings this week and next week. This week we have Tesla, we have Google. Next week, I believe we have Apple. Most of these stocks are reporting earnings next week. Apple is going to be Thursday the 1st. That's next Thursday. Also, Amazon is going to be the same day, so it'll be probably Thursday after market. Broadcom, I think they already reported earnings. Broadcom was back in March. Google is this week on Thursday. Meta should be next week as well, next Wednesday, the 30th. Microsoft should be next week as well, the 30th. Yep. So we've got Microsoft, Meta, Amazon, Apple all reporting next week. Netflix was last week, but it's carrying into today, possibly poking all-time highs, which is kind of nice. NVIDIA earnings are out a little bit further into late May. Tesla is today after market. So, I mean, it's not like all earnings rely around Mag 7, but I think if earnings are stable on those Mag 7 stocks, we see some market cap gains that could be showing some good signs of stability. And I just go back to the index and we go back to like the Wednesday high, April 9th, go back to the Wednesday high. That to me would be a, push back up into resistance, right? That previous Wednesday high would be resistance. We have lots of support here that can become resistance. If the market surprises us to the upside, fine. It's like I'd still want to be hedged till the end of the year. And I look at either a Q4 or a Q1 of 2026 hedge. Just because if there's any shakiness from July onwards, July is when the tariff window is done. Maybe resolve something, maybe we don't. Maybe this escalates. The Fed's going to start cutting rates in June. We'll see what yields do. Coming into September, we're going to have employment data that's really going to matter. You're going to have multi-months of inflation data. So, I mean, that window to me, it's like I'm still pretty undecided what July to December looks like. I think right now, I mean, I know this was a sucky way to start the week, but getting into a dip that has short-term opportunity, like that trade could be totally fine. Just go back up to the Wednesday high. I mean, that's probably a 4 to 5% swing. So from yesterday's low into this Wednesday high, you're talking about a 7.7% move in the index. If anybody's near-term bullish, that could play out, pretty nicely and grab some quick income. I've got swing trades that will benefit from that. So anything that's like swing trades on the QQQ, swing trades on the SPY, those could be pretty helpful. You're obviously going to see some nice P&L fluctuation, hopefully with things repairing. All of my option trades that had like crazy high volatility, and I didn't even start selling a bunch of options until this low and this low. But the IV is still like, I need time to settle. Like the IV is still quite high. We're still like just under 30 on the VIX. Like it's still a high VIX, all things considered, right? VIX is still at 30.41. Like that would historically be seen as like, oh, the VIX is so high, sell premium. Well, we were at 60. I mean, if and I don't know this, I mean, I'd love to see the VIX settle back in to the teens again. And if that is the case, then yes, expect the markets to find a way to rally. Okay. However, if we have a new low in volatility, and it's like, well, are we going to deal with like higher levels of volatility? Maybe it's a third. I mean, this is insane to think about this, but a 30 to 50 VIX would just like that would be head spinning volatility. That would make every day just like buckle up. So I hope that's not the case. But until this thing like really settles into mid 20s, maybe backfill some of these gaps, or until I start to see the VIX term structure go back into contango here. Let's go VIX term structure. We're still in backwardation. So until this starts to slope this way, then we're not quite in a quote normal environment. So we'd have to see this start sloping upwards. Okay, we did dollar, oil, gold, silver. Let's get some currency pairs running. 52.62, checking my SPX levels. I'd like to see a rejection right off this gap from yesterday, if possible, for my SPX trades this morning. SPY at 524.75. Let me check on that butterfly trade really quickly. Should be showing a little bit of profit. Not a ton. I'm only 20 cents away from my pin price. That's super annoying. I don't want to take a tiny little win. I was hoping I could turn, 35 cents into like 55, 60 cents. All right. I'll keep an eye. I got a chart alarm set on the SPY. So SPY 525 is right there. Gap fill around 526. Okay. Keep an eye on that one. All right. Let's get some currencies. Market breadth really quickly. Oops. Okay. Here's another interesting timing indicator. I've talked about this pretty much this entire year. This is the S&P number of stocks above the 50-day moving average. Yesterday was a pretty broad sell-off. I think 84% of U.S. stocks were in decline yesterday. So is this a good timing indicator? Certainly could be. No guarantees, but I think in the near term, having some bullishness, having the stock market, hold in there. I mean, if I were to, I'm thinking like right now, if I did a synthetic long, I just like MES or XSP, if I were to, buy a call and sell a put, it creates a synthetic long, which is my break even's about right here. I have all sorts of profit potential, and yes, I take on some risk. But on XSP, for example, I don't think this is a bad window to expect a bit of a correction. And I think I'm going to take this trade actually. So let me see what would the drawdown be if price is going to fall, be about 1,600 points down. So I'm taking on some risk there. That's going to be roughly my stop off point. So let me see if I get long XSP right now. Let me see what this buying power looks like. So if I go synthetic, I'm going to go out to possibly end of June. Okay, so we're at 526. If I buy a call, sell a put, I'm doing this for a short debit, which is a little bit cheaper. So a 273 debit. Buying power is 10 grand. If I do might be cheaper to do MES. MES out to June. Buy power, I mean, this is way cheaper. I go long futures, only requires about $200 buying power. But for every, if I'm down 25 points, so 25 points and 5, that's not bad. I've got some wiggle room there. Okay, I think I'm going to take this trade. So 985. This is dirt cheap to take this trade. A little bit more buying power. What would be I'm out about $200 to take the trade. It's not awful. Let's see. Okay, I'm just thinking out loud. So if I go at the money, out to June, let me check the prices on MES. The highs would be around 5,500. So I've got about 200 points. If we go from here to here, that is around 207 points. So 207 points at a 5 multiple for micro futures, that'd be up about $1,000. So if I did this I can do this on everyone but one account. And then my stop loss would be below Monday's low. That's my stop loss. I mean, my only hesitation is I don't really love this area, just in case it gets noisy. Versus if we revisit the lows, or I obviously had like the low lows, that's probably a better time to get like a synthetic long. But I'm liking today's candle. Things are looking certainly better. Chart going off, SPY crossing 5.5. Check that spread really quickly. mean, come on, dude. Like 0 DT, I got the thing to pin. This is so annoying. Close. Gross. Can I get... All right, I'm going to try to go after 55 cents here. See if I can get a small win. Still watching SPX. All right. Do I like synthetic long? A little bit, but not a lot. I'll wait. I'm going to wait. If we come back to the lows, fine. Synthetic long to me is way better here. Way better here with much more upside. Obviously, I'm sacrificing a little bit, but this trade would be up about $1,000 for a risk of around, what's the risk there? I mean, it's about a 1-to-1. I've got 200 points of upside, 170 points of risk. It's about a 1-to-1. It's not bad, but I don't love it. I don't need to be super greedy. I want to take the trade, but I think I'm gonna self-talk a little bit longer. All right. Anyway, let's keep going. Sorry. Let's go currencies. Currency strength. Swiss is weaker. A lot of currency stuck at baseline. Uber I saw was getting sued yesterday. AXP I've got trade out to May. Uber's in here somewhere at 74. I mean, price is up, man. I've got ratio spread on Uber looking pretty good. Lyft, I bought some shares down a little bit, but hopefully that'll perform. Aussie CAD. It's going to put in some levels. I'm still riding this thing up to higher levels. If we pull back, the same thing. We have this big move, a little pullback here for a 5.0 or 618 pullback, and then look for a swing trade to like a 127. So if we have a 50% pullback, and then put a swing trade for 127, I think that trade looks pretty good for Aussie CAD. Aussie Swiss. This is just on repeat for the last couple of days. We had a big flush down with all the risk-off trading that bottomed out on the 7th to the 9th of April. I'm just going to be watching for a bottoming pattern. So there will be a time for me to start moving all these buy stop levels around, probably moving lower, and I'm going to start putting in another trade here. That's around 5,000. I'll put one more entry there. And if I need to, I will still average in lower, although not really loving just like holding this thing forever. So I'll put one more trade in here to lower my cost basis. If I spot a bullish pattern, then I will take this chunk of buy stops and I'll move them down. And I'm trying to get maybe my break-even point. Like this is a good spot for profit just to be safe, but I'm looking also at a potential 3 to 5 wave move. Whatever that looks like, if I can measure a 3 to 5 wave move, that's going to be my profit target. So my goal is to move my break-evens down as low as possible. This is going to require a lot of patience and hopefully eventually paying out really well. Aussie yen, if we have risk on, I would think that the Aussie yen could form a bottoming pattern, maybe a cup and handle. Aussie New Zealand continuing to head lower. I'm going to start scaling into this one at 106 and probably the 103.50 handle. A couple of levels just to buy in. So I'll wait for this drop into there to buy more, into there to buy more, and potentially around parity, 1.01, 1.00 to buy more. All this is a big range trade. It's falling inefficiently. So even if this falls, it likely snaps back and finds 108 again. This is a great kind of range-bound currency pair. It has been this way for years. Aussie dollar, I'm waiting for a pullback. Dollar index, I think the dollar index is oversold. CAD Swiss, same thing as Aussie Swiss, looking to see if the bottoms are starting to form. If so, looking to spot some 3 to 5 wave action, move my buy stops down. CAD yen, Swiss yen, staying out of those. Nice to see the Swiss retreat a little bit. Euro Aussie, two levels to pull back. We go high, low, pull back here to settle back in. If that swings to the downside, that is a risk on environment. Okay. So we either have a pullback that you can sell a swing, look for confirmation on a lower time frame, or a push all the way back up to the recent highs for a rejection, confirm that on a lower time frame, take it back down to range lows. So you've got good structure on your WASI. We pull back to a 50618 zone, look for confirmation on a smaller time frame. That could be a nice little swing trade. Euro CAD, overbought conditions with divergence. Not a bad spot. If you're getting in now, you're a little bit early anticipating the move. But if we start breaking a recent low, I think this trade can go right back down to range lows. So another trade where reward to risk is a little bit favorable. This would be your profit versus loss. So I'd say 1.5 to 1, 2 to 1, even if we're waiting for confirmation on that Euro CAD. Euro Swiss looking a little bit better. Same thing on my buy stops. I'll be moving these lower, but I want to spot some type of pullback, some type of bullish pattern. Maybe it's a cup and handle, and those are tough to spot. I mean, cup and handles are this: market goes straight down, bounces, and then as it causes a pause, that's your cup and handle. So that could be seen as a wave 1, 2, 3, 4, 5. This could just come all the way back to those highs again. If that's the case, I mean, maybe that's a take profit 1. I'd like to hold out a little bit longer and look left on the chart. There's pockets back here, so I'd like to hold out towards like 98, 98.50 for profit. Euro pounds, robot trading that one. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie. If it pulls back, high, low, lower high, lower low. If this hits a 50618 zone, that's a pretty good swing with good reward to risk, if you like that trade. Euro dollar, I said moving stop losses and trailing profits. Stop loss below yesterday's candle low is not a bad place. If it goes higher, great. If it doesn't, you had a huge run from this breakout above 105, 106. We've gone up almost 1,200 pips since the lows. It's been a heck of a run. Okay. Pound Aussie, similar to Euro Aussie. Are we going to get a pullback? We had a sharp drop, high, low, lower high. Look for that 50618 zone. Confirm it on a lower time frame. Look for a swing back down. If it doesn't confirm a trade here, meaning like you don't get a bearish confirmation on a smaller time frame, it may drift back up to the highs before it turns. But take your daily structure, look at a 4 or 1 hour chart, and look for confirmation to then align for your entry. So, but I mean, again, typical Fibonacci stuff with a technical obedient pair like this could be a beautiful like 50618 pullback zone and push to like a 127 or 1618. Also, I trade to symmetry a lot. So if it's high, low, lower high, lower low, trade to symmetry. There's still plenty of reward to risk on a trade like that. Okay, pound CAD. I like this trade. I mean, it's not as high as the Euro CAD is, but going back to this area, if it comes up to the highs, it could be a good rejection point for a stop above, and just see if it ranges. Pound Swiss. If you're long pound Swiss, I don't mind this trade. Just be careful on the margin. But long pound Swiss, anything in this structure would be a good target 1. Anything in this pocket area is a good target 2. So you still have about 215 pips, upwards of about 400 pips. A profit potential. Is the bottom in? Is this the bottom? I don't know. We could have price going here, pulling back, and then waving, and we still find my pockets, but it might be a 3 to 5 wave move. Price might go up here and then flush back down, divergence, and then we put a bottom in there. But I would be actively looking for a bottoming formation. Pound yen, scalper's dream, or stay out of it. Pound New Zealand. I mean, I'd like to see a pullback. We've already had a pretty big retreat from this high at 2.34. It's already down 1,000 pips. I don't know if I'd really participate in this one. If we come down to this 200 moving average on the daily, maybe a bounce right there. Or if it does pull back, we have some good structure around 2.28. So we pull back to like 2.28, 2.29, look for confirmation there, and then swing it down to the 200 moving average. If they don't offer the swing trade, if I'm waiting here for an entry and it just keeps sliding lower, obviously I'm going to cancel that trade if it's not filled. But not bad setups. Pound dollar, move your stop losses. We have 12 candles, 11 green candles. Today's indecision, but that's a lot of candles as far as the cycle goes that we're probably going to have some type of pause or pullback. New Zealand CAD, longs worked out pretty nicely, scaled in around 8,000 and it's up a few hundred pips. New Zealand Swiss, watching for a bottoming formation, will move my buy stops lower. New Zealand yen, I'm going to say no trade on that one. New Zealand dollar, one of the better runs. Aussie dollar did a great job coming back to the same range highs. New Zealand dollar kept ripping higher. Again, move your stop losses. This one's probably due for a brief pullback. A brief pullback could maybe offer up some open space, but I don't know if the dollar has continued to get weaker or not. I'm not sure. But either way, this was a strong support zone around 55, 5,600, and it did a heck of a job ripping up like 300 to 400 pips. Dollar CAD. I was interested to look to see if this area holds for a buy zone. I'm not forcing any trades on dollar CAD right now. I would say if we come back anywhere between 35 to, let's say, 3,200, that's going to be my next kind of buy zone on the dollar CAD. If I see something in here where it pops back up and we have some type of bullish pattern, then sure, maybe it's a swing trade. Holds the lows, past resistance becomes support. You can find a swing trade in there. That's about it. Okay, dollar Swiss. Hopefully a bottoming pattern sooner than later. This has been, almost an exact replica of the dollar index, which has left pockets and pockets in oversold conditions. We broke some major lows, but question now is, are we going to keep driving lower into like intervention territories like we saw back in 2020 or 2011, 2015? It's like we've had some disruptive Swiss intervention. I think that the Swiss is also going to be moving a lot with correlation in gold. If gold keeps making higher highs, Swiss is probably going to stay resilient. If gold retreats a little bit, then I think the Swiss can do the same. Because Swiss has probably been acting like the best safe haven right now, as has gold. So if gold takes a little breather, then I think the Swiss will lighten up a little bit. Okay, and then these are a bunch of non-US trades. So our Cape Shiller month-to-month has come down a little bit. Historically, it's still quite high. This is pretty concerning. I think we're trading. I think I shared this yesterday. Like we're at like 19 times earnings for. Yep. So large cap is around 19.1 times earnings, and we've got mid cap and small cap. Beat up pretty badly. You can still see the outperformance of large cap. So I do wonder, and we still have large cap that has to compress a little bit more to kind of broaden out, maybe. But if I mean this week and next week with Mag 7 earnings, if they're relatively solid, that could be good. I think the one thing that hurts the market is you could have good earnings, you beat top and bottom, but you have negative or pessimistic guidance. That's the one concern about earnings right now is like everyone's going to say that, hey, I don't know what's going to happen in the next 6 months, or this is what we're doing because there's uncertainty in the next 6 months. I'm going to have to dive into those transcript calls and see like what are some of the common themes that some of these earnings calls are saying. Like last year, the buzzword was AI. Last year was all AI. Is that a Nelly song? Anyway, all right. Question comes in. You think Trump knows what he's doing right now? No, I don't. I don't think the etiquette of calling a Fed chair a loser and tweeting on or commenting on his like it's Truth Social where all this crap comes out. So it's like he just has like, does everyone see The Office? Maybe this dates me a little bit, but the show The Office, where Ryan the intern put together a Word document for Creed to just type in his thoughts, and Creed thought it was going out to the internet and sharing to followers. Like that's what Trump should have. Just give him an echo chamber to say all this random crap, but nobody ever hears it. And the markets probably wouldn't be as crazy as they are. So I don't think the etiquette exists. And I don't think there's a plan. I listened to an interesting podcast last night. It's just all about trade war and the reality of what the last 30 years have done. The U.S. has profited in a huge way from globalization. China has profited in a huge way from globalization. China is being the scapegoat. Like the U.S. is blaming China. The reality is we could benefit from globalization, but we're just freezing everything. And I don't know the end game. I think that's what's so weird is like this is like the dog that finally eventually catches the car. Like it's just noise. I don't think there's a plan. I think you now see that the talking heads are basically like yes men, and it's just frustrating. Like I've never seen politics so intertwined with the markets. And I think that's what's so frustrating. It's like I've traded for a long time, and politics never, other than the Fed, was never this noisy. And it just creates a lot of chaos. And I mean, look, you can see it literally every day where it's like, what was today? A 1% gap to the upside. What was yesterday? A 1% down to the gap to the downside. What have we seen since Liberation Day? One of the worst sell-offs, one of the fifth worst starts all time in history. And this is what you could argue is event-driven, but my concern is that event-driven becomes structural, and structural becomes systemic, and none of that's good. So I think at the end of the day, the U.S. is probably going to be the country that flinches. We talk a hard bargain. We make it seem like we're super intense about these tariffs, but the reality is, if it's going to hurt our economy, we should be smart enough to pivot. And if we're not, then we're stupid for tanking our economy and watching the entire world just say, all right, we'll try to do stuff without the U.S. That can happen. Like nothing makes the U.S. immune to global trade. Nobody needs us 100%. If there are other countries that are willing to step up and fill our void. So I just think it's crazy to think like that. If we think that the world isn't willing to use other countries and use other free trade agreements and form other alliances just because we're the U.S., it's like we're sorely mistaken. So all this to me is it's crazy, and I've never seen anything like it. I have no traders that have traded a lot longer than me that have said the same thing. This is like the second or third weirdest thing they've ever seen, and it's really frustrating. So best thing is, I mean, I brought this up this morning. Like, this isn't a political conversation. I'm a centrist. I'm data driven. I want to trade. That's all the news I read. But it's in the markets every single day, and it is difficult to make those assessments. Okay. So it seems like Swiss yen could have a good long position. I'm not no, because it's at like 30-year highs. I'm not going to trade the Swiss yen. Plus, I don't want to trade negative swap. If you're long Swiss yen, fine, but you're actually getting negative swap, right? What's the Bank of Japan right now? CB rates, didn't they raise to 0.5? Japan is 0.5%, and the Swiss is 0.25%. You're going to pay negative swap, right? To go long Swiss yen. No thanks. That's my least favorite currency pair right now, Swiss yen. So I took a stab at the swing, made like 500 pips. I'm good with that. I'm foolishly holding against the Swiss right now for swap positions. But I think a lot of this is eventually I'm going to be where I want to be on gold. I think gold will have a correction. I think the Swiss will be a part of that. If we have some risk appetite, then the Swiss will weaken. This has been a big safe haven trade, more so than the Japanese yen, more so than the dollar. So yeah, the Swiss has been picking up the slack for a safe haven for right now. But dollar Swiss, I mean, I'm looking for technical reasons, which oversold conditions, divergence, higher time frame, 20, 30-year lows. The Swiss has been one of the strongest currency pairs run in the last 3, 4, 5 years. So I know I'm early because obviously I've been in trades for 2 years, but I still have 75, 80% of my accounts with margin. I've got plenty of dry powder, and I'm just going to stay really patient, and it's going to suck and it's going to sting, but eventually I think I'll be okay. So, all right. I think that's it for me today. Let me double check the calendar. Yeah, I'm good. So, all right, I'll let you go for today. We'll be back at it mañana. Thanks, everybody. See you. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.